The Peak Credit Union Share Secured Visa credit card is structured specifically to help people establish or repair credit without running into the pitfalls that typically come with traditional, unsecured credit options. This card eliminates the requirement for a lengthy credit history or a high credit score, which directly addresses a major hurdle for anyone trying to build a solid financial foundation. Instead of relying on a traditional credit check to approve a line of credit, the security and control come from the user's regular share savings account. The credit limit is entirely predictable because it mirrors the amount of savings dollars that are pledged and held in that savings account. These funds must remain pledged as secured dollars for the entire life of the credit line, acting as a safety net for the credit union while giving the cardholder a controlled environment to practice positive credit habits. One important detail to note is that this card cannot be backed by other financial accounts, meaning checking accounts, money markets, individual retirement accounts, or planned savings accounts are completely ineligible to secure this specific credit line. Looking at the financial mechanics of this tool, the purchase annual percentage rate is a variable 15.00%, which is calculated by taking the prime rate and adding a margin of 7.50%. Because it is a variable rate, changes may occur quarterly based on shifts in the prime rate. Specifically, the index used is the Wall Street Journal Western Edition prime rate as of February 28th, May 31st, August 31st, and November 30th of each calendar year, with any resulting rate adjustments taking effect on March 10th, June 10th, September 10th, and December 10th. When it comes to everyday management, the card features a grace period of 21 days after the close of each billing cycle. If the entire balance is paid by the end of this grace period each month, interest on purchases can be entirely avoided. If a balance is carried, the credit union uses the average daily balance method, including current purchases, to compute the interest. The required minimum monthly payment is calculated as 3% of the total balance, or a minimum of $25, whichever happens to be the greater amount. There are distinct advantages and disadvantages to weigh when looking at how this card tackles financial pain points. On the positive side, the card charges absolutely no annual fee and no application fee, keeping the cost of ownership low for budget-conscious users. It also features no balance transfer fees, which is rare and highly beneficial for anyone looking to consolidate existing debt without paying an upfront penalty. For modern convenience, it comes built with tap and go technology for touch-free checkout wherever the contactless symbol is displayed, alongside 24/7 fraud protection that automatically monitors transactions and sends text or phone alerts for unusual activity. However, the downsides are just as evident. The card offers absolutely no rewards or cash back, meaning every dollar spent wins 0 perks. It is also completely excluded from the introductory 1.9% purchase rate that Peak Credit Union offers on its other consumer cards for the first 180 days. Furthermore, users who travel or buy from international merchants will face a foreign transaction fee of up to 2% of the United States dollar amount or 25 cents, whichever is greater. Operating this card responsibly requires strict attention to the penalty structures that kick in when mistakes happen. If a monthly payment is missed or delayed by more than 10 days past the due date, a late payment fee of $20 is charged. Things get significantly more costly if the minimum monthly payment stretches to more than 60 days late. At that point, a penalty annual percentage rate of 18.00% may be applied to the account. This penalty rate is not a temporary slap on the wrist either, as it remains in effect until the cardholder successfully makes 6 consecutive minimum payments exactly when they are due. Additionally, any returned checks will trigger a fee of $25, adding extra strain to a tight financial situation. To summarize, this card functions as a steady, reliable tool for building up a broken credit profile, but it is not without real operational hazards. The core risks revolve around liquidity lockup and severe penalties for mismanagement. By tying up money in a regular share savings account for the life of the credit line, that cash becomes completely inaccessible for emergencies or other investments. Meanwhile, faltering on payments triggers immediate financial penalties, and crossing the 60-day delinquency mark brings a painful 18.00% penalty annual percentage rate that locks down for a minimum of 6 months. It is an effective utility for credit rehabilitation, provided the user can afford to freeze their savings